retirement accounts.
Investors are always looking for promising opportunities, and tonight our Market Monitor guest found some, including two in a sector that has been under an enormous amount of pressure. He's David Smith, Chief Investment Officer at Rockland Trust Investment Management Group. David, good to have you with us. We appreciate you being with us.
Thanks for having me, Tyler.
So you, like a couple that are in the oil business, though not too far out on a limb, I guess I would put it. Why don't you explain why you like Exxon?
Yeah, so at Rockland Trust, when we make investments, we're really looking out 3 years. And we look at the time horizon that far out in the distance and suggest that today's stock prices look incredibly cheap because we're discounting discounted oil. And so Exxon is a great example of a company that will ultimately survive. Its balance sheet is rock solid. And so it has an opportunity, we think, to take advantage of the market correction and be an acquirer of assets from companies that either go bankrupt because they're over-levered at this moment in time, or that have to sell assets to pay down debt. And so with Exxon's significant balance sheet strength, they will be out there purchasing these assets either out of bankruptcy or ultimately from the balance sheets of other competitors.
Next on the list is Schlumberger, which is also in the energy field, but in a different way. And one of the reasons you like it is you think that there's some consolidation, a trend that's going on in that particular area of energy that might benefit Schlumberger.
That's correct, Sue. So what we're seeing and hearing from the energy companies that we invest in is that they are trying to pool their purchasing power and leverage their dollar spend on whatever drilling activity they have and consolidating those in the players like Schlumberger that have a very diversified portfolio of products and services they can offer. And what's happening then, the specialists, who are typically smaller and are in a finite area, are really being challenged today. We think ultimately what will happen is these companies, as we progress through time and if oil stays depressed, that eventually they'll have to sell as well. And that will be a great opportunity for Schlumberger to consolidate the space.
And another pick of yours comes from another sector that has really been walloped over the past year, biotech. Name your name and tell us why.
Yeah, so at the end of the day, again, it's sort of a similar theme here. With depressed share prices, we believe Gilead Sciences, which is a company that has been in the news quite a bit of late, but is building a significant cash pile on its balance sheet, is in a fantastic position to do what it's done very successfully in the past, and that is go out and acquire great capacity and capability in some of the biotechnology stocks that have really been hit here. Their significant drug today is actually the result of an acquisition they did many years ago, and we think that they have the ability, both with the cash, the strength of their balance sheet, and with their innate ability to sort of identify opportunities to go out and really acquire something and make ultimately something very successful down the road.
All right, David, thank you very much. Have a great long weekend. David Smith at Rockland Trust.